Jammu and Kashmir Bank is the bank that we're looking at. We're joined by Mr. Mushtaq Ahmed, who's chairman of the bank. He joins us on the show. Mr. Ahmed, to begin with, if you could take us through your credit and deposit growth targets for the next financial year.
Well, we have already given the guidance that by March 2013, we will have a business of 100,000 crores and the profit has to be around 1,000 crores. And the business mix would be that we should have credit portfolio of 40,000 crores and deposits around 60,000 crores.
And Mr. Ahmed, as far as interest rate cuts from the Reserve Bank of India goes, what are your expectations in 2012? And do you think you would be able to sustain your margins at 3.7% in the next financial year?
The first thing is that we should not expect any interest cut during the current quarter, because people will be very much concerned and interested to build up the balance sheets, and they would like to come out with better balance sheets. So there is not going to be much of respite as far as interest this is concerned. Well, we expect that there could be some respite and relief beginning next quarter only. As far as we are concerned, we are at 3.70% and we have given a guidance that our net interest margin must remain always within 3.5% to 4%. Well, as of now, we expect that our current margin that will be maintained.
Mr. Ahmed, post savings account deregulation, what has been the performance on your CASA ratio and what's the future outlook? Do you think that the savings account rates 6 to 7% for the banking system are sustainable for FY13 as well?
The first thing is, yes, we had an impact because this saving rate was increased from 3.5% to 4%. So naturally we had to shell out some more money. That's why that our net interest margin, it has come down by say 4 basis points. But in the current quarter, I don't feel that there is going to be any compulsion or pressure for J&K Bank to increase the rate of interest on savings bank. And next quarter we will take a call when other operators also take some move.
And what's your outlook on your core fee income growth, given that it has been close to single digits?
Yes, last year because of some regulatory restrictions, we couldn't have much on the fee-based income. And another part was that J&K Bank was normally participating in the term loans, and we did not have much of scope through this fee-based income because we were not participating in working capital loans. And as a result, the commission, exchange and other income that would emerge from that segment was not there. But since we have started participating in that, and number two, we are also vigorously just distributing insurance and other third-party products. We expect that next year this fee-based income should move in double digit.
And Mr. Ahmed, what's the outlook on your asset quality? Because your gross NPA has remained nearly flat quarter on quarter. Do you see the gross NPA trend improving to below 1.8% levels?
Well, if you see, if you compare our PCR provision coverage ratio with the rest of the operators in the industry, we are the best at 94%, and we would try to inch up, and even under adverse circumstances, we would like to maintain at 90%. But since you never know in fourth quarter how things turn up, there could be some surprises, but we don't foresee as of now any surprise or any shocks on that account. So we are very much sure that we will be in a position to maintain our PCR above 90%. Well, for the industry, yes, there are going to be, it's really a trying time.
And Mr. Ahmed, what's your exposure to the aviation, telecom, steel and power sectors? Also, is there any exposure to Kingfisher Airlines, Air India, also to Etisalat?
No, we don't have any exposure to Air India, but we have a very, very small exposure to Kingfisher Airlines, where our share in the overall consortium is just above 1.5%.
What is the amount of restructured assets and NPA and restructured assets, Mr. Ahmed, as of December, and your outlook on the same?
Well, I think this is a very important question. Let me say that last year, when we compare our restructured book this year and last year, there is a great improvement. Last year, our restructured book was 2,600 crores and it has come down because of the repayments and people adhering to the repayment schedules, it has come down to 1700 crores. And out of this 1700 crores, my NPA figure is only 170 crores. And even for this 170 crores, we have a provision of 140 crores, which is over and above the normal PCR we have.